I am joined by Mark Yusko, Morgan Creek, live here at Benzinga, Future of Digital Assets. Mark, we've got some catalysts coming for the crypto market. We've got the Bitcoin halving, and we've got the potential approval of some Bitcoin ETFs. What does that mean for the crypto market and potentially for Bitcoin in particular?
Yeah, so I think first of all, it's just, I call it the great wall o' money, great wave of money. Just simple math. There's 30 trillion with a T on the sidelines in financial services where the brokerage firms, et cetera, have said you can't invest in this asset. So let's say when the BlackRock ETF gets approved, which I believe it will be the first and maybe only one to get approved, let's say 0.1%. Let's say every advisor says 0.1%. That'd be 30 billion. 30 billion on an asset that only trades about 100 billion of the 700 billion or odd. You know, most of it's in hodlers and locked up accounts. So that would be meaningful. But let's say we get 1%. That's 300 billion on 100 billion of free float. That'd be a big deal. So
Mark, you're famous for Bitcoin price targets. We've got several people giving them out, but talk to us about your current Bitcoin price targets and what goes into establishing those projections.
Yeah, so I'm just a math guy at heart. I'm a science guy, I'm a math guy. So I look at it very simply. If you follow Metcalfe's law, the fair value of the Bitcoin blockchain, the network, is around low 50,000 today. But the price is only 35. Well, price is a liar. Price isn't the value of something. Price is what two people agree to exchange a small amount of good or service. So the value today, somewhere around the low 50s, let's just round it to 50. The halving in April of next year will double that, because what we see in these halving cycles is the fair value has to rise, otherwise the miners wouldn't make money. So we need the miners to make money, so the price naturally rises. So that would take the fair value to 100. So I look at between now and next summer, we're in crypto summer, until next June, then crypto fall. And between now and then, I think we migrate up toward that fair value of 50K. Then the halving occurs, you get that FOMO event where the price rapidly rises toward 100. And then in crypto fall, you get the parabolic top. And everybody's like, well, what about the last couple times? Well, in the last cycle, we went up 2.3x. Fair value was 30, we got to 69. There was a lot of leverage. We had GBTC. I think with the ETF, we could get to easily 1.5x fair value. I don't think there'll be as much leverage this time, so maybe we don't get to the full 2 times at 200, but I'm pretty comfortable with 150K middle of next year.
So we just had a trial, right? Sam Bankman-Fried in the crypto space. What are your personal thoughts on that, and what could that mean for crypto? I mean, is this a positive sign moving forward?
Oh, look, I mean, bad people do bad stuff. He's a bad guy. He did bad stuff. He wasn't alone. There were a lot of bad people in that firm. And everyone's trying to make it a crypto thing. It's like calling Madoff a hedge fund problem. There was no hedge and there was no fund. The guy hadn't made a trade in 13 years and there was no bank accounts. He was just transferring the money into his own account. So that wasn't a hedge fund problem. It was a bad guy doing bad stuff problem. And the same thing with, isn't it ironic? His last name is Bankman and Fried, or Freed, right? It just seems ironic to me. But he was a bad guy doing bad things, and he didn't make crypto bad. He didn't change crypto. He didn't change Bitcoin. He didn't change Solana. He was stealing money to make political contributions to curry favor. That's as old as time. And so now that it's gone and we can focus on crypto again and digital assets again and Bitcoin again, things are going to get better. So will there be other bad people doing bad stuff? Sadly, yes. And everybody's like, oh, that only happens in crypto. Are you kidding me? Look at every time there's been money, whether it was gold miners, right? The guys that came to sell them bogus maps on where to go, and then when the guys went out, they mugged them for their stuff. And the guy who got rich in that was who? Sam Brannan, who sold them all the picks and shovels. The same thing's going to happen now is there will be people who show up, bad people doing bad stuff. But the builders are going to keep building, and the miners are going to keep mining, and the network's going to keep growing, and the use cases are going to keep rising. And the quick story on tech is this is a natural evolution of technology. 54 was the mainframe, 68 was the microchip, 82 was the personal computer, 96 was the internet, 2010 was the mobile net, 2024, which is still 2 months away, is the truth net, where we swap trust, right? We're standing in the heart of financial services world in New York City, trust all around us. The trust industry extracts $7 trillion a year. Blockchain technology and Bitcoin and others are going to liberate that $7 trillion and put it toward more effective use cases going forward by replacing trust with truth.
One of the biggest Bitcoin skeptics out there, legendary investor Warren Buffett. So Buffett's gotten lots of investments right. He's also gotten some wrong, and sometimes he'll admit that he got some wrong. So if Warren's wrong about Bitcoin, do you think he ever comes around and admits that he was wrong?
Look, couple things. One, haters are going to hate. Warren, like Jamie Dimon and others, are incentivized to hate on Bitcoin. Bitcoin is the technology that will disrupt all of financial services. As I said, it replaces trust with truth. Truth is superior to trust. We don't need to pay fees for trust if we have truth. And so the fact that Berkshire Hathaway has 40+% of its assets in financial services, we shouldn't be surprised that Warren says it's like rat poison squared. But not to be outdone, his partner said it's like trading newly harvested dead baby brains. I'm like, WTF, Charlie, really? But they have to be extreme. They have to be that way because they're in the business of financial engineering. You know, everybody fancies Warren as this old-fashioned stock picker. No, he's the greatest financial engineer of all time. He set up a structure that no one else can get, where he never pays taxes on a leveraged portfolio of dividend-yielding stocks. It's mad genius, and I'm just jealous that I didn't think of it. But it ain't old-fashioned stock picking. So when he says, oh yeah, I miss technology, he didn't care about technology. He only cared about Apple when it became a high dividend, high buyback stock, so he could tender his shares in this tax-deferred trust that goes on forever. Again, mad genius, but to answer your question, will he ever admit he was wrong? Heck no, because he might live forever. But it's going to be a while before Bitcoin has a use case that allows it to be a dividend-producing asset. It is essentially digital gold. Gold pays no dividends, but gold is compounded at 5% a year since 1933. Well, wait a minute. No, it hasn't. It doesn't yield anything. What? No, it didn't. Gold has stayed the same. A single ounce buys a fine person's suit. None of us wear suits anymore. But if you went to Savile Row, 1 ounce would buy you a fine person's suit for 5,000 years. Why? Gold didn't get better. The money got worse. We keep printing money, and the value of gold in dollars goes up. The same thing with Bitcoin. Bitcoin doesn't change. 1 Bitcoin is 1 Bitcoin. Will always be 1 Bitcoin. But we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars. And the fact that we doubled the money supply in 2020 meant that Bitcoin prices should double. They did. And now they're up more than that because we're continuing to devalue our currency. And here's the crazy thing. 6 years ago, Larry Fink, one of the most powerful people in the universe, said Bitcoin is an index of money laundering. Then he goes on CNBC 3-4 weeks ago and says, you should get some from my ETF when it's approved and protect yourself from devaluation of the currency. Wow. That's a wow. And then he compared it to safe haven assets like gold and treasuries. Huge win. But that's the reality. This is digital gold. It has all the good features of gold: scarcity, high stock to flow ratio, meaning the amount that's produced every year is roughly equal to the amount that's lost or stolen. So the stock stays consistent. It's very scarce. But gold isn't very divisible. It's not very portable. Like if I had a bar and I wanted to break it in half and give you half, I couldn't do it. I'm not strong enough. And even if I could and wanted to send some to the listeners, I couldn't stuff it in the camera, but I could send them Bitcoin with a couple pokes of a thumb and everything's good. So it's more divisible, more portable, and for the next 5,000 years, it will become the base layer of money. Remember, money is an asset that exists in the absence of a liability. The only thing that qualifies for that is gold. Everything else that we think of as money is currency, and it's backed by debt. And it eventually goes to zero. There have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. All the rest are down between 97 and 99.9999% because we devalue, when I say we, the governments devalue them because it's easier than paying back the debt. So if Bitcoin is digital gold and becomes the base layer of money for the next 5,000, 10,000, 15,000 years, how valuable is that? I don't know. It's probably a pretty big deal. And as Satoshi said, you might want to pick some up in case it catches on. Because if enough people think the same way, it kind of becomes a self-fulfilling prophecy.
Artificial intelligence, big topic this year. How is Morgan Creek positioning yourself and the fund with the growth of the sector?
Yeah, look, I love the fact that AI is a 68-year overnight success story. Right? AI, the term was coined in 1955. I'm old enough to remember that 1980 was deemed the year of AI. In 2000, Intel stock went up 20 times. Not 20%, 20-fold because their chip was going to change AI. It's down 75% since then because this little company called NVIDIA came along. So AI is not new, and AI is a tool. My 8th grade computer teacher, back when computers were like with stone tablets, said a computer is as smart as a screwdriver. And so what makes a computer smart is the people coding it. And AI is a tool to make decisions with data. So the way we invest is we invest in the A, B, C, Ds of the digital age. AI, blockchain, chips, and data. Everything's about data. In the history of time, up to 2010, Eric Schmidt said there are 5 exabytes of data. Today, as you and I are talking, there'll be 329 exabytes of data created. So capturing that data, organizing it, managing it, analyzing it, and making decisions with it is what matters. So we're investing in companies that help you make better decisions with data using AI. We look for ways where it integrates with blockchains to allow you to organize the data better, to store the data better, to utilize the data better. Because ultimately, the digital age is about data. And AI is a tool. It's not the only tool. And most of the valuations in the space are pretty crazy right now, so we're kind of avoiding them like the plague. But at the edges, there's some real great innovation going on, and that's where we try to play.
Awesome. Well, Mark Yusko, live from Benzinga's Future of Digital Assets 2023.